Most traders lose, and not because they can't spot a good setup, but because they're stuck in one of the three trading phases that every single trader must go through. And in this video, I'm gonna break down the exact path traders take before ever seeing consistency, and why skipping just one phase will keep you in the same cycle for months. Phase 1, spotting opportunity. Opportunity equals context. Knowing where to even look is the first step. We gotta know where opportunity even lies in the market. But phase 2 is where things get really serious. We're gonna be building a repeatable system around that edge. Not a signal, not a strategy based off of a candlestick pattern, a real process with a real edge around the opportunity that we can identify. And then comes phase 3, the final boss. Executing that system with discipline, over and over and over. Your system only pays if you run it like a machine. Same rules, same risk every single time. Only thing that'll change is the market context. Now, if you've ever felt like you're stuck doing everything right but not seeing results, you're probably stuck between phases. And by the end of this video, you'll know exactly where you are and what you need to do next. And throughout the rest of these examples, I'm going to be using my style of trading, which is auction market theory or order flow footprint charts to trade. And this is how I see opportunity in the market. We all see opportunity differently depending on what you're looking for and why you're looking for it. So opportunity for me is going to be finding these value areas, because within these value areas, we're typically going to get a range bound market. And I'm going to break down the logic behind me setting up a process around an edge that I can identify in the market, right? So if I understand that whenever the market is range bound within a value area, I understand that mean reversion strategies are going to be more conducive for this market environment. Now, you might ask, how do you find value areas? That's going to be something you're going to need to use a volume profile for. If you're not familiar with the volume profile, you're not sure how to use it, check out one of the videos that I posted about volume profile to break down so you can fully understand what volume profile is and how to use it. But because I know that the market tends to be range bound within these value areas, I understand that we're going to get a lot of fake outs at our value area highs and at our value area lows. You can do a lot of back testing for this. You can back test, you can forward test, you can collect a lot of data. But we understand that whenever the market's range bound within a value area, it's going to be more conducive for range bound strategies. This is usually where the market likes to chop up a lot of traders, get them stopped in and out of trades. That's where the market takes out the high, reverses back down to the lows, takes out the lows, and reverses back all the way to the highs. So this is an edge that I'm going to set up a process or system around. So I can ask myself, am I able to identify opportunity, and do I know how to identify opportunity? And that's going to be, yeah, I know how to use a volume profile. I know how to use or identify opportunity using a volume profile. That's going to be step 1. Do you even know how to identify opportunity? Now, taking advantage of the opportunity that you can identify is going to be a whole nother question. But number 1, can you even identify opportunity? And if you can't write down what opportunity looks like for you and how you trade, you know you're in phase 1 and you need to work on finding an edge in the market. You need to know what opportunity looks like. And as you can see, we're trading within the value area. Not only that, we've already had a fake out at the value area high. So this is already letting me know, based off of the behavior of the price action, it's letting me know we might be in a range bound market within this value area. The statistics let us know that within a value area, the market spends about 70% of its time inside a value area. So it makes sense why we see a lot of fake outs at the value area high and value area low. So right now, I have been able to identify opportunity. So I'm going to get ready to start executing a position now. Let's go over to phase 2. Phase 2 is going to be creating a process or system around that opportunity. This is going to help with creating a standardized entry and exit criteria and an overall criteria for whatever opportunity you're looking for. But start by turning your edge into a checklist. Use when X, Y, and Z aligns, then you can enter. I know for my case, I use price, I use order flow, and I use time before deciding on entering into a trade. So you need to figure out what is a criteria that you need to see before you even enter a trade. Once you're able to identify the criteria that you need to enter into a trade, you want to work off of some type of mental model. And I like to use if-then statements. So if this happens, then I'm going to do this. But if this happens, then I'm going to do this. So if this happens, then I'm going to exit my trade around here. But if the market goes against me, then I'm going to do this. So use if-then statements for every decision that you make in the market, and have predefined exit zones, right? Have target 1, have target 2, and stop loss levels based on structure or volume profile, not emotions. Again, this is really going to be based off of your trading style in the market. Maybe you trade ICT. You know what the market needs to do to invalidate your trade thesis. So if you're using order flow or auction market theory, you know you're gonna base market structure and volume profile on your trade thesis. That's gonna let you know if your trade thesis is in play or if the market is invalidating your trading thesis. So use if-then statements to make all your decisions, but also have a criteria that you need so that you are able to actually take advantage of the opportunity that you see in the market. So that's going to be phase two. Do you have a process or a system that you can use and execute whenever your opportunity arises in the market? I'll show you a live example here in a moment. Now that I see a little bit of buying kicking into the market, you could briefly see imbalances on the offer, which is the buyers stepping into the market, and then also knowing we tend to get fake outs at this level. I was prepared to jump in right away. Before I even added my position right now, I already knew this was a level where I wanted to buy at. So I'm watching order flow. Sellers are getting aggressive, but I can also see right here on the 5-minute, sellers are not getting rewarded as much as they were just 5 minutes ago. So you can see we have negative delta, strong aggressive sellers in the market, but the market is having a tough time pushing downwards. So reading these things in live time after I enter my position is what makes me more comfortable to stay in my position and not get shaken out. So I'm executing my process or my system now, which is phase two in the live markets, right? If the market does this, then I'm gonna do this. So if the market shows buyers at that value area low, I'm gonna look to get long. Then I'm gonna look to get long, right? I'm basing my process or system based off of if-then statements. If the market does this, then I'm gonna do this, right? My potential target is gonna be near these highs or at this value area high. So if the market reaches those highs, then I'm gonna look to sell. So you can see now right here, I just put in a stop loss right beneath this low where I took my entry. So if the market comes back down and makes new lows, then I'm gonna stop out of the market. This is what allows me to make those logical decisions while I'm live in the market, because I already have those if-then statements pre-planned before the market is live and it is open and emotions are going all over the place. So if the market does this, then I'm gonna do this. So far, the market's looking really good so far. I wanna be patient for my first target, which is gonna be right here at these highs. I'm gonna put in target. This is what I'm targeting. You can see the risk to reward on the trade as well, right? This potential reward makes sense for this amount of risk. I wanna take trades like that. And I just showed you guys my trading journal where I don't always take green trades. I even have some outsized losses. I even have some losses that are larger than they should have been. By having those if-then statements will really just save you from having to make rational decisions immediately in the face of volatility in the market. Now, price struggling a little bit to get up to our target, but you can clearly see here the market is still proven to be range bound within our value area, which is the edge that we're looking at in the market right now. Now, the one thing that I remember seeing live in the moment is seeing how I didn't really like all these imbalances starting to stack on the bid. Like, we started to get a lot of weakness. We started to see a lot of aggressive sellers hitting the market around this price level. I do remember seeing that in live time and just thinking like, man, that's not looking too hot. I don't really like that sellers are starting to get aggressive consistently at these price levels. But now comes phase three, your ability to execute your system consistently. And right here, I like to use a trading journal for this. This allows me to really get better at what I'm good at, really improve on my weaknesses, and overall help me even identify the areas in the market that I need to work on and the areas in the market that I should be doubling down on. So I took a little screenshot of my trading journal, or this allows you to see what you can do when you have the ability to execute your system consistently. So we can see over here, this is gonna be the equity curve. You can see it's green, it's going up, but we have a little bit of pullbacks on the way as we're making highs, right? You're not gonna be perfect. Even when you see your opportunity, you're not gonna be executing at the highest level that you could on every single trade. So even if you have a green trade, you should still be going back to figure out what you did well and what you could have done better, and then implement a plan in place for you to do just that. So you can even see here, right? I'm executing my game plan. I'm consistently executing the opportunity that I see in the market. Yeah, there are gonna be days where I could have managed my risk a little bit better, as you can see right here. This isn't gonna be very favorable, but as long as I have a consistent approach to the market, right, I know what my P&L curve will look like over the long haul, right? Again, over here, green, 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 red. Could have managed my risk better here. Green, green, red, managed risk very well. This one looks slightly red. I can barely even tell if that's red or green, but the trade was managed well regardless. Now, green, 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 red, trade managed very well. Green, 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 red, trade managed very well. Now we have an outlier to the upside. So you can see when you have a system that you can consistently execute, you can then journal all of your trades and identify what you could be doing better. Maybe there's a time zone that you trade better in. Maybe you trade better the first 2 hours of market open, and maybe you tend to give your profits back around noon, maybe around 12 to 1 when the market's a little bit slower or a little bit choppier. It'll show you that in your trading journal, so you'll be able to fine tune and adjust your system depending on what type of data that you're yielding. Because just because we have a process where we can back test it and it's profitable, it doesn't mean you're going to end up profitable, because you still need the skill set and experience to be able to execute that system consistently at a high level. The best example that I like to use is NBA players, for example. Let's use Steph Curry. Steph Curry is known for being able to hit threes consistently, right? You watching this video, you've probably been on a court before and you've probably shot a basketball and have been able to hit a three. Maybe you played in high school, maybe it's been a while since you played, but you've been able to hit a three. What's the difference between Steph Curry hitting a three and you hitting a three? You both know the mechanics. You both are able to identify the opportunity. You both know where the three-point line is. You both have a system. You both know how to shoot. But why does Steph Curry in the NBA? Why is Steph Curry Steph Curry? Because he can do that consistently at a high level, which brought him to the NBA. That's really the only difference, is people that are able to do what they do at a high level consistently. And that's what separates people within a certain industry, no matter what it is. And we're starting to reverse a little bit now, but I'm going to stay true to my process and my system. This was my profit target. So the market is either going to hit my profit target or the market is going to come back down and stop me out. I could have made the decision to maybe start scaling out earlier, but if I do something like that, I'm going to have an inconsistent process moving forward, because I'm going to be in other trades where I'm going to be like, well, remember that last one reversed against me? Maybe I should start taking profit now instead of staying true to my process or system. And I think that changing up your game plan in the middle of your trading sometimes, not all the time, but sometimes, is a sign of your lack of faith or confidence within your edge as a whole, because that's letting you know you don't believe your edge is going to potentially play out in the long term. So right now, I want to be disciplined, right? This is starting to come down to phase 3. Can I consistently execute my process? Even after a red trade, even after a green trade, can I consistently execute my process at a high level without feelings from past trades getting involved with the present moment or the trade that I'm taking right now? That's where it's really going to lean on psychology and your own self-awareness. So you can see here, I end up stopping out a little early. I know originally I was going to have my stop down here at the lows and stop out there, but I could clearly see the momentum in the market and order flow taking over. The aggressive sellers starting to get pretty aggressive here. So in this moment, I was deciding on breaking even or just fully getting out of the trade, because once I was able to identify that buyers were not getting rewarded for their move, I ended up exiting the trade a little bit earlier here. Now I have to sit with myself and I have to be okay if the market were to rip back to the highs. I have to be okay potentially sitting out of that trade, and I have to be okay with sitting with the emotion of knowing that could have potentially been a green trade by prematurely exiting this trade right here, right? This trade doesn't hurt me. I still made a little bit of money on it, but I did get out of it a little early, right? This was my initial exit. The market can absolutely rip back to the highs and hit our initial profit target, and we wouldn't be in it. So before I even make those decisions on getting out of the trade early based off of what I see, I'm also making the decision that I'm going to be okay with the emotions that come along with making that decision if the market doesn't actually end up stopping me out and I stopped out early for no reason. So as I make those decisions, I also have to know and be okay with the emotions that comes along with it if the market were to continue to our first profit target. So right now I'm thinking, man, the market might go ahead and reach our initial profit target that we were looking for. But I know if the market gets back down to this value area low and we start to see more buyers present again, I know I will start to look for more buys, and my trade thesis isn't over, right? If the market has price acceptance and time acceptance outside this value area low, then it invalidates my trade thesis. But until then, I'm going to still be looking for opportunities to get long. I'm going to be looking for opportunities to get a better risk to reward on the position. So you can see now, after we took out those lows, we still had buyers stepping into the market. Also, aggressive sellers are dumping into the market right now by looking at the delta, and we're still getting a lack of follow through. So I still understand that the market can still stop me out, but the fact that the market is not having any type of follow through is letting me know that this potential long opportunity is still present. So I'm still going to watch and identify. So you can see sometimes you just have to manage your risk. Sometimes you just have to manage the uncertainty, because you can see in this moment, I got stopped out twice, but I was really able to manage my risk at a high level. So the market ended up coming back down and would have stopped me out anyways. And you can see here, as we reverse here, as we get more aggressive buyers in the market, you can see I go ahead and I get long another position, putting a stop down here at the lows. So I'm long again. And this is the reality of trading. Sometimes it's just gonna knock you out and shake you out of your position. But if your trade thesis is still valid, you're still within your risk parameters for the day, you can still take the trade if your trade thesis is still in play. So the market still has not invalidated my trade thesis. So we're gonna see if we can come back up here and take out these highs. And now that the market came back and took out these lows and even put in these lower highs, this gives me even more confidence now that the market will come up here and rip and take out these highs and hit our first profit target. But you can see sometimes the market isn't just 2 + 2 = 4, right? Buy at the value area and wait for it to bounce. Like, it doesn't always work like that. Sometimes you got to dance with this. Sometimes you got to just trade depending on what the market is giving you. And that's really going to be dependent on your confidence in conviction level, right? So you can see I got stopped out a couple times before catching this third move. And now we have to see, is the market going to actually go and hit our first profit target now? But this is a great example just to show the market isn't just 2 + 2 = 4. It's not that straightforward. Sometimes you have to dance with the market a little bit. Sometimes it's going to come sweep out this high and you got to make the decision if you want to manage the trade and re-enter, right? I made the decision that I'd rather manage the trade and look for a re-entry rather than sitting through all of that drawdown. So that's a part of my process. That's a part of my system. Now, in terms of managing these initial trades, right, that goes to phase 3, being able to consistently execute your trading system, right? I just executed my trading system 3 times, right? So far, 2 is a loser and 1 might be a winner, but we're still sitting through this trade together and we have to see the outcome. But you can see I just deployed that trading system back to back to back, right? I need to be able to make logical, quick decisions while the market is volatile. So you can see we're pulling back here. The only way I'll be able to make logical decisions as the market is still really volatile is by having some type of structured process that I already had coming into the trading day. So as you can see, I'm patiently waiting here for the market to either to get to my profit target and automatically take me out of the trade because I have a limit order set to automatically pull me out of this trade and take me out for profit if we hit this price point. And I also have a stop loss set at break even at this point to automatically take me out of the trade if we send it to the downside. So at this point, I don't need emotions to take over. At this point, I can let the market do whatever the market's going to do, and I'm going to be okay and satisfied with whatever the outcome is going to be, regardless of if I make money on this trade or if I don't make money on this trade. One of the reasons why I ended up putting my stop loss here at break even is because if the market is going to test me that many times and continue on breaking a new low, and trading back within value, I also like to identify when the market is going to start playing games. So if the market does that 2 or 3 or 4 times, that's going to let me know I'm not as confident in the market. I'm going to start to lose a little bit of confidence, and that's going to really affect how I manage this trade. So now the market is finally catching some momentum, ripping back and taking out these higher highs. And you can see the limit order that I had in there was automatically executed whenever we took out that high. So I can feel comfortable and confident and good about the fact that I followed my process. I followed my trading system, and you can see the roller coaster of emotions that you might go through if you don't have some type of consistent process or system that you deploy on whatever opportunity that you're able to identify in the market.